Hey guys, this is the market update. We're going to look at Bitcoin and Ethereum, which are dumping today. Quite a volatile day where the market has decided that it's going to test a lot of stops and see where the support and resistance is. I'm going to talk about that in this video. Then the next few events that are going to really move the price, because at the moment, low volume, summertime, they can manipulate the market. This isn't real price action. And then I'm going to talk about the next step in the recession, which is the housing market rolling over and how that's going to affect things, because obviously that is where most of people's wealth is tied up, and that is going to affect the price and liquidity in markets. Bitcoin is just a liquidity asset, and so that's how it trades. Look at Ethereum though. The chart is so different because of the merge. Such a more bullish chart than Bitcoin. Bitcoin looks very weak as an asset right now in terms of its price action. Ethereum, even though they've tried to dump it today, still a much stronger price action because of the merge. So let's have a look at Bitcoin, which has really come and tested support down here at around 21,500. It's definitely been bought into down here, but this is a very typical kind of Friday weekend kind of let's try and find all the stops and try and stop people out and get people trading. You can see the volume is really low down here, so it's just one of those days. But it's a fairly weak price action. We saw it try to break out of this ascending wedge, which it did. So, if you did trade that ascending triangle, then, I assume you've taken profits up here at kind of 25,000 as it broke out. And so that's the trade. And then obviously you look for the next trade. This right here is next week. There's going to be a meeting and the Fed is going to be at that, and it's going to give some forward guidance or at least some more notes about where it sees the market. I don't think they're going to change anything. I think it's just going to be the same. Inflation is too high. We're not done, and we still have rate hikes to go. That is what the market expects. This right here is the next CPI read. This is going to be a huge mover in the market. And I'm going to talk about the housing market and how I think that is going to start feeding into much lower inflation as well, which has two sides, both the good and the bad side, obviously. Now, really, the next trade for me is really trading this. Short term, you can trade this because whatever the Fed says probably will move the market a little bit. But I actually think the big event is this one right here. And so for short-term trading, you're really just going to sit out the market and see where the trade setup lies in anticipation of this. I believe CPI for August is going to come down as well, and I'll explain why in a second. In terms of Ethereum, this chart looks so much more aggressive and bullish because of the merge. So right here is next week's meeting, and then just by some luck or fate or whatever, you have the merge actually happening on exactly the same date, maybe a day before the CPI figure. And that is this box here. There's going to be extreme volatility around this event. So you have the merge, which has been waited for years and is a huge value accretive event for Ethereum, and CPI, which if it comes out to be a good number that the market likes, then obviously you're looking at kind of like the macro and the micro for Ethereum both potentially being positive. As you can see right here, the price and the price action is just so much kind of more indicative of a chart that you want to go long, whereas Bitcoin doesn't feel like that. So like I said in the previous video, we were in a really good channel right here. We have broken that today. We'll come down to this support level and see if we find support here. If we start bouncing around this level, then I think that's probably a good trade to get into around the merge if you want to trade that. But definitely stop losses in place here. The merge is going to be such a crazy event that it's really difficult to try and analyze that. How I would play it maybe is, if I want to speculate on it, maybe just to have a kind of breakout trade where you put a stop either side that gets triggered either way, and then you can kind of get into a position on a breakout rather than taking just a long or short position earlier. Because if you're getting into a position right here in the middle, you're kind of in no man's land and you're hoping for it to go one way or the other. Whereas if you're putting in some stops, just trying to take advantage of that volatility, either side of this, it's going to break out of this, right? Like it is going to, like, either up or down. So to take advantage of volatility rather than actually trying to take a position, just put some stop orders in, right? Just put a long and a short stop order in above this, and whichever way it breaks, just try and take advantage of that volatility either way, with a stop order to go long or short, and then another stop order to obviously, once that triggers, to kind of take a profit. There's loads of ways to play this. Other people are playing this through options and futures, which gets a little bit more complicated and depends on your kind of level of trading if you have positions yourself. But ETH is much more bullish as a chart for me, and something that's definitely more tradable than Bitcoin, which just kind of looks kind of weak, and it just kind of looks like it wants to consolidate here. But really the big thing now, inflation is coming down. That is absolutely for certain in commodities and in oil. It's not going up anymore, and so inflation is coming down from that. What we have to look at now, the next step, is two main things that actually contribute to inflation in the States anyway, is the job market and wages, and also rents and housing prices. Before we get into that, if you want to trade on Bybit, link in description, you can get up to $4,000 as a deposit bonus for Bybit. So click that link, find out if you can get the deposit bonus. That's in your futures trading account, only if you trade futures. So what we're going to look at is the housing market, some charts here from Charlie Bilello, which are amazing, and they are showing the housing market just starting to roll over. This is going to feed through to much lower inflation, but then it's sparking this kind of, well, if the housing market is rolling over, that's like really quite bad for the economy in general, and the whole thing can start to unravel. This is why what the Fed says at the next couple of meetings and what they do is also really important, because they want to knock inflation, but they don't want to cause a huge crash and a kind of downward spiral. As you can see here, the median price of an existing home sold in the US fell 2.4% in July, the largest monthly decline since January 2020. So we are seeing existing home prices fall. Now, that is not inflationary. 2 years ago, the 30-year mortgage rate was 2.96. Now the 30-year mortgage rate is 5.6, and the home price is $404K. With a 20% down payment, that's an 81% increase in the monthly repayment. So as you can see, house prices coming down, and also some other charts right here. Existing home sales continue to plummet, down 20% over the last year and at their lowest levels since 2020. This is where a lot of the existing and the present FUD is coming from. Like, house prices are rolling over. We're going to have a 2008 style crash. I think the market is set up completely different to that. I think for the most part, credit spreads are within healthy levels. Now, we have to look at the Fed and say, how long do they want this to go on before they come out and stop it and say, we're done or we're pausing? And they're going to be data dependent, like they say. But this is why a lot of people are worried right now, whereas I just feel like we're at the start of what needs to happen, right? This inflation narrative has to come off. And in the States, if you look at rental prices, you can actually see that they make up a huge amount of the CPI inflation. Rent inflation in the United States accounts for 32% of CPI, the Consumer Price Index. This is the thing that has to come down. House prices do have to roll over a little bit, or at least just stay as they are. You can see the inflation rate here. As long as this stops going up, then the inflation print is going to completely vanish. When the inflation print has vanished, then the Fed has done its job, and it can start focusing on making sure that this doesn't spiral out of control. Something to be aware of is that these decisions have implications into the future. Remember, when the Fed started tightening, it was towards the tail end of 2021, and the housing market now in 2022, towards the end, midway through, is only just starting to roll over. And so there's no point waiting for that housing market to really get absolutely terrible before they flip, because these things take months, 6 months, a year to actually filter through. And so what we're going to be seeing if inflation keeps coming down is, even if the Fed gets a little bit looser and says, okay, we're kind of actually going to ease off right here, those economic figures, the housing market, that takes a lot longer for that to feed through. So that can still be going down, even though the Fed starts flipping and the market starts going up. That's why it's so important to understand that the market and the economy are related, but the market is way ahead of what happens in the economy, and Bitcoin is way ahead of what happens pretty much anywhere else because of how long duration it is and how speculative it is and how it really just trades on interest rates and liquidity far more than the stock market or anything like that. So in terms of Bitcoin, why is it weak? Bitcoin relies on liquidity flows in. These liquidity flows and the expectation of them must be in a healthy state, and these dates are what we're looking at right here. This is the next CPI, what the Fed says. I don't think this is going to be as important as what happens here, and then the next meeting from the Fed afterwards to really get a gauge of like how far do they want to keep the pretense up that they're going to be really, really hawkish before they say enough is enough. We think this thing's going to start breaking down, so we have to pause. So that's really the important dates for Bitcoin. For me, it's going to be weak until then, in my opinion. Check out the Bybit bonus. If you are a trader, you can get a deposit bonus if you put fiat or crypto on the platform via that link. I'm James, this is MoneyZG. Cheers for watching, and I'll see you in the next one.